Welcome to the Asset Revolution podcast, where each week your hosts from Arbor Digital provide educational opportunities for financial advisors and individual investors to gain knowledge in this emerging powerhouse that is digital asset investing. The Asset Revolution podcast is your connection to the future of digital assets and an opportunity for anyone to get off zero. Let's dive in. All right, everybody, welcome back to a very special edition of the Asset Revolution podcast. I have brought back the one and the only Matt Kolesky. Welcome back.
Thanks, Mark.
And we are actually in your house right now recording this.
We are in Houston, Texas. Yes.
Yeah. And this is going to be a topic that is very near and dear. It's to Matt's heart, as it is to Arbor Digital, because it's an experience that's helped pave the way in how we approach doing what we do on a daily basis with our investment portfolios and our service offering to financial advisors across the country. So the main topic of today is around Mt. Gox. And there's a lot of headlines around it. You know, what it is, what's happening, is it going to crash the market? So a lot of people are asking, you know, what is Mt. Gox? Why is it going to do this to the markets? I read this and we just want to understand a lot more. So we figured, hey, why not get someone who's actually experienced Mt. Gox firsthand and lived it? So Matt, thanks for coming back.
Well, yeah, Mark, thanks for having me back on. It's good to be here. It's fun to be recording here in Houston. So yeah, Mt. Gox, it's something that we're going to be hearing more and more about as the payments are finally going to start being processed, supposedly in 2 days. But if none of that really makes sense, or what are these payments? What are you talking about? We'll go back and kind of tell a little bit about the story and then how my personal journey intersects with Mt. Gox. But it's important to understand that this part of the story goes back almost 10 years. Mm-hmm. So Mt. Gox was the original international Bitcoin exchange, and it was based in Japan.
Okay.
And it was started by, and if you've heard the origin story, it's quite funny. It's people that were trading Magic the Gathering cards, and they launched an online exchange, and then they started accepting Bitcoin.
So M, Magic, G, Gathering.
So it stands for Magic the Gathering Online Exchange is where Mt. Gox comes from. So what it evolved into was just a pure Bitcoin exchange. And so they moved on from the Magic cards. And it was the only one in the world that had this size and scale. And it was, again, based in Japan, but anybody in the world could access it. And it was an interesting way to get money onto the platform from a US bank, or in my case, a credit union. So you had to interface with this other, I call it a widget called Dawala, where you would move money into Dawala, and then that would then move into your Mt. Gox account. It took a long time, but that's how I bought my first Bitcoin. I had mined it previously, but the first purchases were through Mt. Gox. So this is 2011, 2012, 2013. And I believe it was either 2013 or early 2014 when the exchange got taken down from we think it's an inside job. So I first noticed it when I had interestingly enough, I'd moved to the UK. And so I was trying to establish this connection between my UK bank and Dawala and Mt. Gox. And I was sending money. Yeah, it was pretty complicated. So I was trying to send money back out from Mt. Gox. And they're like, oh, your withdrawals are going to be put on hold. I'm like, well, that's strange. It's never a good sign. It's people that just lived through the last 6 months and what happened with Three Arrows Capital and the exchanges that just collapsed. Right, they're experiencing the same things.
Yeah.
So it's not new. It started, a long time ago. Long story short, I pretty much wrote the whole thing off. I was like, okay, I had some Bitcoin on there, I had some cash in there. It's gone. Lesson learned. And then it was several years later where I started getting these emails. Oh, there was a recovery of several 100,000 Bitcoin. And if you had an account in there, you need to fill out these forms and get money. You can get your Bitcoin back or whatever. We don't know what's going to happen. It all sounded like BS to me, right? Because I'm already super skeptical. But that was around, I think, 2016, 2017. And so this lawsuit has been going on since then, and it's now 2022. So we are 8 years since the collapse. And now there's hope that payments are going to be made to the folks that actually were damaged by the hack. And so that's where we are today. And I think what's relevant is you're going to start hearing about it, and we've already started to see news articles around, oh, it's going to, all these Bitcoin are going to come onto the market. It's going to crash the price because, that's what it does. Worse than inflation? I don't know. We'll see. So that's what's led us to kind of talk about this story of me from a personal standpoint, but also what does it mean as you queued it up, right? For Arbor, what does all of this mean for the things that we're doing at Arbor Digital?
Yeah. Well, no, I appreciate you level setting there, kind of going through the beginning stages. What is Mt. Gox? Because I think, while we have been in the space, or you and, me learning about it, it's kind of part of your history when you come into the space. You got to learn about all of these things that have happened prior to jumping in. So that's definitely one of the more monumental things that have happened, one of the biggest historical events in Bitcoin's history, which is why it's a big deal too, because now I think it's a 200,000 or so Bitcoin. I think that's 180,000 total Bitcoin that could be inserted, paid back, that the trustee now has to pay back, through all the claims that were made. And so I think the fear is that, what happens? Is this going to flood the market? Is everybody going to sell? I think there's a lot of concerns about, just we've already had so much pain this year. And so that's where these fears are just amplified there. But, we're here to kind of give you what's what, kind of maybe talk about what possible scenarios that could play out. But let's go back now. I'd love to understand more of the psychology. You mentioned you were mining Bitcoin before you even bought Bitcoin on the exchange. So take us through that whole process. How did you even hear about Mt. Gox? Why even buy Bitcoin on this exchange?
So the first point, mining, I think 2010, 2011. I have a good benchmark because my wife took a job overseas in London and we moved in 2011. So right before leading up to that, I was really fascinated with this concept of Bitcoin. And I had joined a mining pool. It was all online and it was done through your basic home computer, something that it's really hard to do now without a lot of heavy investment on equipment. But I was interested in this idea of, money that's not controlled by a government, not from the, crazy libertarian aspect, but just this is an interesting experiment. Why does the government need to control our money? It hasn't always been the case, right? Even going back in this country, in the United States, into the 1800s and early 1900s, right? There was banks issued their own currency, right? And had their own president of their own bank on it. So the idea that money is a tool that needs to be controlled by a government is a more modern concept. And so this idea of a digital value that can be exchanged online, I'm like, that's pretty cool. And there's something there, instead of pulling out a $20 bill or swiping your credit card, right? Which is, the credit card, right? And all that's pretty digital, but this is something that lives natively on the internet. So it was new from the standpoint of the breakthrough from what Satoshi Nakamoto had done in the white paper, right? There had been previous attempts to solve the double spend problem. So blockchain.
Yeah, there was eCash or something before, again.
eCash, DigiCash, there's a whole bunch of things that had been tried in the past, but it was the blockchain technology and the hash technology that kind of set the table to solve the double spend problem. And so I was like, wow, that's a really interesting concept if they could pull it off, right? And so there's even a time where there's a Bitcoin faucet. You could just go and go up to it and say, give me some Bitcoin. It was just, dripping, and you put some into your wallet. It was I don't know, was it 5? It started with 5 Bitcoin.
Wow.
Or something. Maybe, don't quote me on that, but I didn't do that, but it was definitely out there. And so I was like, this is an interesting experiment. And so I'd always been fascinated in monetary policy and what money is. And so I just kind of kept it on the back burner, something I was going to do personally, as a hobby, and just kind of pay attention to it. And then I went through this life transition where I moved overseas, and I kind of lost touch with it for maybe a year or two, and then got back into it in 2012, 2013. And that's when I was introduced to Mt. Gox, and then I was like, well, I'm just going to buy a little bit and see what this is. And did that, and just kind of followed it. I remember the first time it went over $1,000. I was like, wow, okay, but maybe there's something here. And then it was not too long after that, and I might be getting my timing off, but is when the whole exchange kind of collapsed.
Yeah.
And then, like I said earlier, I just kind of mentally wrote it off. But that was an exchange collapse. It wasn't a Bitcoin collapse, right? And I want to make sure that we differentiate the two, right? It's not the technology of Bitcoin itself that was compromised. It was an exchange, which remains to this day one of the largest risks for Coinbase and honestly for Gemini and for all these other exchanges, right? And so it's important to point that out, where the technology itself has not been compromised. It was the centralized institution that was running the technology that was compromised.
The people
Right
behind it as well, people trying to exploit it, and then what happened after. So can you talk a little bit about what happened after, so it got hacked, and then what happened is, oh man, like everyone's just got hacked, it's not our fault, like
right. So the website shut down. It was like, you can't access your funds, you can't log in, we're similar stuff, we're going to try to work through this, and think it was originally, it was temporary shutdown. And then of course you realize that later that, okay, the news articles start coming out that there's the whole exchange is gone and the Bitcoin are gone. And you're like, well, okay, that was an interesting experiment. So personally, right, you're dealing with that loss emotionally from a financial standpoint. And for me, like I said, it was something that was always a little bit of a hobby, and I was kind of experimenting with it. And so it wasn't something that really, I was like staying up at night, losing sleep over. It was still a significant amount, definitely in today's dollars with Bitcoin, but still at the end of the day, it was just, I chalked up to kind of a learning experience, which is a very valuable one.
Yeah, absolutely. Because I think a lot of people come into the space now, and then who haven't done their homework and learned the history, they may think that everything they're experiencing now today, and then we've seen Celsius, Voyager, this is all new, like this has never happened before. So no, it's actually kind of it's the same playbook, and I think it's interesting actually now, like we're actually seeing more like lessons we should have learned also in the crypto space, but now also bringing in lessons that we should have learned in the traditional world with the 2008 financial crisis, with bad,
You bring up a good point, Mark, and it should point out, right, with the Mt. Gox hack, it was an inside job. It wasn't because they were over leveraged. It wasn't because they made bad investments. They didn't understand the security around their own internal private keys and those types of things. And so there wasn't enough security measures, where today Coinbase and Gemini have, a magnitude of like 1,000 more secure policies and procedures around safeguarding client assets. That wasn't the case there.
Yeah.
So I want to point out that it wasn't, a counterparty risk or an over leveraged, entity that brought them down, Mt. Gox. It was just bad security protocols internally, which is still a legitimate risk. At the end of the day, if you're a consumer, it doesn't matter why your money's gone. It's gone.
It's gone.
But it's important is, if you're studying this, to understand what the differences are in how those losses happened. I always think of it, the movie Casino, right? With these, it's like you've got the dealer, right? And they've got their chips. And then you've got the pit boss watching the dealer, and then you've got the camera up of them watching the pit boss, and then you've got somebody else watching them. It's like, it's kind of the same thing with how these exchanges are set up. And I'm simplifying it to some degree, but that's really what it is. It's about who do you trust, and where is the security around safeguarding those assets.
And again, one of the biggest risks, again, to any of this is these types of risks that the security measures are not in place. So that's why it's really important to do your due diligence, do the research, to have trusted partners. And that's where the institutionalization of, and the institutional quality is still coming to this space. And it just wasn't there back then. Not even close.
Not at all. It was being run by a guy, Mark Karpeles, who's got in way over his head. And to be fair, right, I don't think he realized how quickly Bitcoin's price is going to move and how many accounts they opened. They were not prepared for it. And I'm not, throwing him a lifeline or anything, because he certainly is guilty, but it's like, he was just a dude that was running an exchange that just really like blew up in terms of the amount of accounts and price and all things we talk about, like customer service, people trying to process withdrawals. Like they weren't staffed for it at all. And then, then it led to somebody's hand going in the cookie jar and stealing everything, basically.
Okay, so we now fast forward. We have the hack that's happened. And again, there's a lot of information out there. We'll put some links into some really cool interviews from people who experienced it, who are part of leadership teams and consulting teams. There's actually some really interesting stories that have come out from that whole experience. So we'll put some links into that. But let's stay focused now. You went through this, and then how did you even get back to a place where, like, you know what, maybe we should, think about, helping other people invest in this the same way I did, even after experiencing that, like, I'm going to play devil's advocate here. I don't know how you get to that.
Well, it's why I pointed out before, right? It wasn't the technology of Bitcoin that was compromised. It was the exchange. And so I'd always, even though I'd lost, these assets at Mt. Gox that potentially could recover, like I always paid attention to the story of Bitcoin. And then when Ethereum was launched and all of the block size wars that Bitcoin went through and all this other stuff and Litecoin, like followed all in XRP, like I was just watching this all play out. I'm like, there's something here. There's something that's happening. And there's a new asset class that's being created. And that's what really got me excited, like around 2015, 2016, to see, okay, how can now there's more understanding of this idea of digitally transferring value, not through Visa's network or MasterCard's network or through the Fed wire system, which is, decades old, transferring it natively over the internet. That was compelling. And now you started to see institutions build on top of it. And then when Ethereum's white paper was released, I was kind of paying attention. I'm not a technical person, so I don't, but the idea of what a smart contract was quite fascinating to me. It was like, now you have this idea of programmable money. And we were just talking earlier today, like, let's automate what we can automate, right? And spreadsheets and all that stuff, it's great. And people reconciling things and spending time, reconciling spreadsheets and accounts. It's like, all that can be automated. And if you incorporate technology into that in new and exciting ways that can live natively online, which is what Ethereum is, right? That was kind of like this aha moment for me, like, okay, now this is beyond a personal hobby. This is something that we, as a financial advisor personally, like, how can we start to bring some of this potential return to our clients? And so that's where it crosses over into the professional realm for me and for Arbor. And that was, in 2017, we started kind of formulating these ideas internally. I moved back to the United States and then was really able to work with some of the other folks at Arbor to say, okay, how can we, in a responsible and as secure and as compliant way as possible, have our clients get exposure to some of these assets? And so that's why even though I had this personal loss, I still felt strongly enough about what this technology is to be able to go and launch Arbor Digital and to be able to invest the time and energy into it.
So it sounds like, if I heard you, it's the mistake that people make then is when they see, them lose trust, is they apply it only to price action. Oh, it's not real because of the price. It has nothing to do with the technology. And so what you're saying, the reason why that you still had the confidence to bring this to clients and keep investing yourself was because, the technology was good. The technology didn't fail. And actually it's still as revolutionary as you thought of it from the beginning. So I think that's what I heard there. And then now you have all these different use cases and different, mechanisms for which value can now start building through smart contracts, programmable money, and how it's going to take systems that have been in place for decades, hundreds of years. Now it's going to take those into the next iteration for the next generations to experience and live through.
Yeah.
And so how do we get our client? Like, that is a more compelling story, not just because, it went down 80% or 90%.
Right.
So that's really interesting. And it's an important distinction to make. I agree. There's still a lot of people who can't get past that. When you lose a lot of money, even then it's like, well, there's obviously things underlying. So I want to now take it to what gave you that confidence. You've done so much due diligence over the last 5-6 years in this space to have that confidence to be able to bring this to clients. So in what way did you bring it to clients? What was the first way you brought crypto to clients?
So good question. So Arbor Capital Management, which is, the parent company of Arbor Digital, has had an alternative investment sleeve for clients for a long time. And so we felt that initially the most appropriate way to launch exposure for our clients was through the alternative sleeve based on our due diligence and our investment process. At the time, there was no, you couldn't do it on Gemini, you couldn't do it on Coinbase. You could tell your clients to go do it there, but you had no way of seeing if they were actually doing it or what they were doing. So we did use GBTC, the Grayscale product, initially. And after several years of research, right, and this is in 2019, we launched that, made our first purchase of GBTC at the time, and quickly realized, it's great for exposure, but is the underlying asset is already volatile enough, and then you have a price on a trust that can swing above or below and add even more volatility. And I was like, well, this is an okay product for this. It got us exposure, and it did incredibly well over those few years that from when we first bought it. But then we wanted to expand beyond just Bitcoin, and we wanted to find a way for clients to have more direct exposure than through a trust that doesn't necessarily capture the price movements that we wanted. And that led us to our long discussions with Gemini. And from my personal history of having an exchange collapse, like the vetting process of what they go through to protect the client assets was paramount to our compliance and due diligence, and remains to this day. They were the first ones to get the SOC 1 and 2 reports, right, which talk about their internal control policies around the private safekeeping of client assets and private keys. And that to us felt like, okay, they're doing their job to safeguard client assets. That gave us the platform then to wade into this for Arbor, and then eventually for our SMA clients.
Yeah, and it's interesting because I think you throw the term institutional quality out, and I think a lot of people will still say that it doesn't exist yet still. But you look at a lot of the products and a lot of the funds and a lot of the ways that Bitcoin or Bitcoin-like products have come to the world, not just here in the US, but, Canadian ETFs, Brazilian ETFs, or, over in Latin America, Gemini, has boasted, institutional quality custody for a lot of those products, the Canadian ETFs. So there's a lot of history with Gemini, and, I didn't know this until I, came over myself, and if I just read the headlines, I would never have known that. So understanding that Gemini was really at the forefront of doing things in a compliant way, and then, being one of those first institutional grade or institutional quality custodians, it sounds like that was kind of one of the things that led you to be okay with, building this offer for clients.
Yeah, that was the foundation, right? We wanted to, as I mentioned before, we wanted to get beyond just Bitcoin, and we wanted to have it have clients as close to the assets as possible. And that's where Gemini came in. And yeah, the work we did with their compliance team to understand their process around the safekeeping was paramount to this, right? This is the only way it was possible. We had conversations with pretty much every other custodian that you can think of a name, all of the big headline ones, and none of them are ready yet to offer it to advisors. And that's what was different about Gemini's offer. But you're right, Mark, like the fact that they're, the Canadian ETF and a lot of these other folks are using them as an institutional grade custodian is important, and gives us more confidence to move forward and work with them.
Yeah, absolutely. And again, you may be wondering now, why are we talking about Gemini so much? And the reason why is we felt it was important to highlight the differences, because again, Mt. Gox is just an exchange. So isn't Gemini the same thing? And it's really important to highlight, no, we've come so far, exchanges have learned so much. And again, a lot of people actually say, like, don't go to exchange. You should actually just self-host your own wallets, not your keys, not your coins, is the popular saying.
Right.
But there is value to having that security infrastructure.
Absolutely.
And especially, when you have clients coming to us who, don't have the time, energy, or expertise to understand, how do I onboard? And I know I want to, get invested and participate, but how do I do that safely and securely?
Yeah.
So we've just come so far since Mt. Gox, and that's kind of why we wanted to, highlight the differences, and not just Gemini, but every other exchange, even Coinbase and all the other exchanges, like, and that's where Voyager is another one of those exchanges where, you're doing due diligence and, and you start to see certain things. Like I remember one of the things that I saw pretty quickly when, I was doing even my own after I came on, helping you guys, was this whole FDIC thing that they were, boasting. I was like, that's a little weird. So I don't know. So again, you just see some things like that, and it, you just have to pay attention. And so, but let's now go back to purely on Mt. Gox and kind of talk about, like, we kind of went through today. So today, so what I think it was back November 2021 is when they had this plan to they appointed a trustee, and then they started building out, they had this Bitcoin that they needed to now get back. So they had the claiming system. So you had to go through the claiming system, got all that done. So right now, what's the process? Where are you at?
So yeah, the trustee was appointed, like 5 years ago, and it's just been an arduous process of submitting documents, and then, there's just these steps that you have to go through. And one of the things that was a little bit scary was, right, the whole list of people who have a claim was released, so that is publicly available. So now people are very sensitive to getting emails and, solicitations from other people claiming to be part of the settlement trust team, which is totally fictitious. And there's people that want to buy claims and all this stuff. So it's like, so you can imagine these people that went through this, like, who do you trust, right? We just lost these assets, and now we're getting all these emails. And so where we are now in the process was the rehabilitation proposal was approved finally in I think it was November of last year.
Yep.
And then so that what that means now is they are ready to start processing claims. And so there's different classes of claimants, and I'm not going to get into all the details of it and where I'm at, but the first group of claimants are going to start receiving payments. Literally, they said by, September 15th of 2022. So that's where we are.
Yeah.
And fingers crossed that actually starts happening. You can imagine after 8 years, people are still like, I'm not going to believe it until the Bitcoin actually shows up into the wallet address that I'm telling them to send it to.
Yeah. Yeah. And I think thanks for going into that, because I think also like there are some overblown things that you're starting to see. It's like here's the mistake. Number one thing that I think people are making a mistake on, that September 15th, all 180,000 Bitcoin are going to be flooded into these wallets, and then everyone's going to, not even if they don't sell, they're going to have the option to sell. And so that's scary for the markets, right? But I think this is where we can kind of dispel that myth, is like, this is going to take 3-6 months, possibly up to a year, even just to get the Bitcoin to all of the wallets, to all of the people, to all of the claimants. So it's going to be a long time before we get to, from 180K down to 0 Bitcoin and they get distributed.
Yeah, it's going to be steps. And, I wouldn't imagine even there's people that probably still are interested in the asset class and own Bitcoin, Ethereum, other places. And they're not everybody's going to sell. In fact, I think the vast majority probably would just continue to hold, right? It's like, why sell now? I'm just speculating to some degree, but the point is it's not going to be boom, here's 180,000 Bitcoin. They're all going to get sold and liquidated at once, because it's going to be I'm thinking it's going to take a year or two for all the payments to be made.
Well, yeah. And that's why we went through, and I think this is an important piece, why we went through your story at the beginning, right? Because you have to, I think the thing that it's tough for us as consumers and people, especially who are now in the space investing, for them to put themselves in someone's shoes at that time, who was investing. It's not the same thing as today. Today, anybody can go sit there and go on an exchange. Coinbase has millions and millions and millions of users. Like, that wasn't Mount. It's not like it was so easy where I can open up my phone and click a button and I have Bitcoin.
You just had to scan the QR code at the Super Bowl, right?
Yeah, exactly. Back then it would, like you said, it was an arduous process.
Yes.
So if you're one of those people that was hacked and you were participating in Mt. Gox, think of all the steps you had to get through. You weren't just some random schmo who heard about it and was like, I'll throw, $10,000 into this randomly, right? It was, you had to know how to get it on. You had to know about Bitcoin. It was very small. So to think that those same people are then going to be the first ones to sell, sure, there may be some. It's very hard. In order to use Mt. Gox, then I just think I would have had to have really believed in Bitcoin itself to actually start doing that. And sure, there's probably some small speculators and traders who wanted to take advantage, but that couldn't have been the majority.
No, I think most of the people back then that were investing were probably more similar mindset of, hey, let's experiment with this. We're not day trading this. That's not what it is. Mm-hmm. There were those people out there, but to understand how technology evolves and the exponentiality that it can bring, like, that's what was exciting about it. And so I think people are going to have that same mindset, and let's keep the Bitcoin, right?
So I think at that time there was only believers who were investing in it. No one had heard about it then. So to think that all those people are going to sell, I think that's what, Mark thinks that's overblown. A little bit. I think that's, we can appease that. So that's the first myth.
Real quick, we'll add on to that. At the time, right, the stigma around Bitcoin was far worse than it is today, right? It was associated with drug dealers and
Silk Road,
right? And all the illicit stuff that was going on online, because of its relatively private nature, right? You didn't need the federal banking system, you didn't need the international SWIFT system and all that kind of stuff to do these things. So and there's a whole episode we could do on Silk Road, but the idea, like Bitcoin, it had that cloak and dagger feel of like, oh, what is that? It's like you're just using that to avoid the regular money. But there were those of us that were like, no, this is an experimentation in money, and we need to be paying attention to it. And so that's what was originally exciting about it. But I wanted to make sure, like, now the FUD then is a lot different than the FUD today.
Yeah.
I'll just leave it at that.
No, that's good. So the fact that it was so hard to do it again, and now it's so easy. I mean, let's quell those fears of that everyone's just going to sell it. It's just, that's a very low probability situation. Again, I could be wrong.
Right.
Could be, but I think that given the data, given the experience, given the history,
yeah,
that's a low probability. So the second, I think another thing kind of to dispel from this is what is going to happen to the Bitcoin network itself when now we have Mt. Gox done. Like, is this going to change adoption? Are people going to take the Bitcoin and move it to other blockchains? Like, are they non-believers in Bitcoin now? Are they going to move it? I think that's the other, not just buying and selling, but now are they going to take it off? Like, it still could have that detrimental effect. So what do you say to people who say that, well, all those people now probably don't believe in Bitcoin, they're going to go now to the Ethereum or other blockchains?
Yeah, they could sell it, or they could wrap it and move it onto another.
What do you mean?
Onto another protocol. Yeah, you can take your Bitcoin and wrap it into, and then now it's living on the Ethereum blockchain, right? So it's it's a piece of Bitcoin that on Ethereum that represents an equal amount of Bitcoin on the real Bitcoin network. And so if you are one of those people that doesn't believe in Bitcoin and you want to leverage it but not sell it, you can do other things with it. So yeah, we'll see. I think there's going to be a variety of people that, do different things. Some will sell, some will keep it, some will wrap it, some will, do other things with it. And now even with like, Coinbase or Gemini, right? You can go and put it on an exchange and then borrow against it from the exchange, right? You don't have to sell it.
Yeah. All main reasons why we're going to be okay.
Yeah.
The Mt. Gox scenario is not going to crash the Bitcoin markets. If Bitcoin just happens to quote unquote crash or have a big sell off, there's probably other dynamics that you're just not seeing.
I think it's, Mark, the other thing too, it's like what gives me confidence to move into this is one, it's having the deep background, right? I can remember seeing Bitcoin at, $10, $50, $70, the first time I did 100 and 1,000, and then comes all the way back down. And so when I see people, oh my gosh, Bitcoin went from 60 to 20, I'm like, well, I can remember when it was at 70 and 1,000, which I'm not sitting here to say, look at that, how cool that is, but the exponentiality, right? Once it crossed through 10 and 100, it never really revisited those, right? Maybe it got close a couple times, and now it's 1,000's been left in the dust. I think during the COVID pandemic, it got below 5, maybe for like a day or two. Yeah. So it's like it keeps the lows keep getting much higher and the highs keep getting higher. And so there's this idea, and I've talked about this on some other podcasts, like just look at the NASDAQ over the last 20 years, right? Yes, it's volatile, but the value that has been accrued in technology companies, we'll call them, right? We're talking protocols. We can also talk about companies. Look at how much value has accrued to these to these companies, right? That's not going to mean revert back. And all of a sudden, Exxon and JP Morgan and Cisco are going to be the largest, and Walmart are going to be the 4 largest companies in the US. That's not what technology does. This is technology that is combined with Metcalfe's law. You can throw Moore's law in there for the processing, and you get this, exponentiality almost squared, right? It sounds silly, but it's like, that's what we're talking about here. Yeah. That's why I'm excited about bringing this to advisors and to end clients, because yes, we've got stocks and bonds, and the traditional markets have done an amazing job, but now there's a new emerging asset class that is not only going to revolutionize, but cannibalize and do all kinds of new things, which is at the end of the day what technology does. So I implore people to think about how your personal journey has been over the last 10 or 5 or even 20 years with technology, how it's transformed parts of your life and skills and things. That's all this is. Yep. People get, it's Bitcoin and the price is this and it's blockchain this. No, it's technology. Yeah. Just simplify it and think of it through that lens.
Yeah. And I think one of the mistakes I think we also tend to make, and it's just too easy to anchor towards it, is, we only look at price. Like, okay, like we've experienced these up and down price, but let's not just talk about the exponentiality of price, but exponentiality of, wallet use, people using the network, people developing on the network. I think, what we pay attention to at Arbor very closely is what are those two pieces? Those are really what's going to, especially at the early stages right now of where we're at with the development of this technology. What's really, really important from a fundamental level is that you have developers and you have the smartest minds from all different backgrounds, different specializations coming in and devoting that intelligence and then aggregating all of that collective intelligence together to now push this forward. And that's what we're seeing. And that's where I get really excited. As much as the price goes, for me, like the price can do whatever it wants. But when I see the adoption happen with wallets, with active users, with what actually they're using the protocols for, and then on top of that, you layer in, look at what developers are doing. Look at what the migration from like Google and Apple and all of these big, Microsoft, Microsoft bought GitHub. And I remember listening to the call and like as the reasoning why they bought them. And one of the reasons was we didn't want to lose developers. Like they were losing developers and we knew we had to stop that. It's the same thing that's happening there. So when you pay attention to the developer community, where's the collective intelligence going to look and apply that intelligence now? And you see that going into these new areas of technology. I get excited about that. And then sure, price is going to do what it's going to do. But when I see the trend on those things, developers and, wallets and active addresses and people actually engaging with the networks. And then you layer on top of that, all of the big companies now that are making the partnerships, Ticketmaster partnering with Polygon, which is a part of layer 2 on Ethereum. Like there are just so many things happening. And when we get stuck on price, it's one of the biggest mistakes, I think. And that's where I think, especially with this whole Mt. Gox thing, people are just getting too focused on the price and not really thinking about, okay, what is this actually doing? And it's really not going to do anything. Like, it means nothing in the grand scheme of things in terms of the adoption of Bitcoin or developers. Like developers aren't going to leave Bitcoin because Mt. Gox now is going to start paying.
No. And you bring up a couple really good points. It's watch the development activity, right? People are waking up to the realization of, okay, and you kind of dancing around this Web3 idea and the next iteration of the internet. And that's where developers are going because they're realizing, and this is all enabled by blockchain, right? That there's something here. And you see it in the financial services sector too, where people are leaving the big institutional companies to go work for, blockchain type companies. And so that trend is not going to reverse. And in fact, it's only going to accelerate. Price might slow down some of that migration and acceleration, but especially on the financial side, because that's what at the end of the day, the financial side is about money, but those are just going to continue to accelerate. And that's what gets us excited because you talk about other metrics besides price, developer activity, the wallets, how are people using this? And the other thing that's always, it's helpful to point out is like, we've alluded to it, these are global networks, right? Yep. So 24/7, 365, anybody, anywhere with an internet connection, anywhere in the world can access Ethereum, Bitcoin, any layer 2 solution that they want to engage with. You don't need permission. You don't need a regulator to approve your account. You don't need a bank to approve your account. You can just go and do it. And that's what's super exciting. And watching these networks mature, that's like you said, other things besides price, things that we're paying attention to.
Well said. Yeah. Well, I only have one more question then. I think we've covered a lot with Mt. Gox. I hope if you're watching or listening, you now have a better understanding of what's going on. But so Matt, what are you going to do with are you selling?
Good question. Like I said, I'm still like, I won't believe it until it actually shows up. So I'll let you know. I'll let you know when that happens.
Okay.
That's my answer.
All right, cool. We'll have to do a follow-up to make sure we'll be monitoring closely to see if you actually get the Bitcoin. But man, okay. So it's been really fun to jam with you on Mt. Gox. You now get to do what now we've been putting through guests since the last time you're on is we do these quick fire questions.
All right, let's go.
And just so everyone's aware, I have not prepped Matt for this at all. So I'm even more curious about what we're going to see. All right. So first question. What is your biggest pet peeve about crypto or people in crypto? Sorry.
My biggest pet peeve about people in crypto, probably the maxis and their unwillingness to bend, whether they're a Bitcoin maxi or an Ethereum maxi. I really can't stand either one because it tells me that they're just so super invested in one or the other that they can't see past one protocol or that there's any flaws in it. And I think that's a dangerous mindset. That's my biggest pet peeve by far.
Very well said. Okay, what's an accomplishment in life outside of family and work that you're most proud of?
Outside of family and work, that's a good question. Probably it's going to be related to soccer. I really enjoy coaching, so I'm a licensed coach. I coach soccer in the UK and in the US, and I'm currently a referee in the US, and have my badges for those things, and it's a lot of fun. I really enjoy it, so I'm pretty excited about that.
Yeah, very cool. Okay, so last one, it's another crypto one. What is something that detractors of crypto or digital assets get right?
I think you asked somebody else this recently, Mark.
I ask everybody.
I've heard this. Okay, yeah. What is something detractors of crypto get right? I think the detractors that have a good understanding of what this is can question the technology and question the security of especially layer 2 smart contracts, because there is risk there. Even with the Ethereum merge, there's risk. But to be more specific, like these bridges and things that people are using code to build and connect and create a financial infrastructure, there's risk in that. And that's real. And we've seen bridges and get attacked and hacked, right? Where that's actually the flaw in the code. And so the developers and the writers of the code got something wrong, and then the auditors maybe missed it. So that is a true risk in crypto that I think the detractors are absolutely spot on, and that shouldn't be shot down like, oh, it's just another piece of FUD. There's plenty of that. There's plenty of FUD that is based in fiction, but there's a lot of it that should be based in fact. And part of our job as fiduciaries is like, let's vet all of these risks and talk about them and put them on the table. And so that's the answer for me is what do the detractors get right? Understanding the smart contract and code risk that's inherent in blockchain.
Wonderful. Well, Matt, it's been wonderful jamming with you on this. Thanks for sharing your story.
Thanks, Mark.
We got to bring you back again real soon.
Yeah, I'm looking forward to it. Looking forward to the next podcast, and I might be a host or co-host here soon.
Wow. So there you go. There's the tease. There it is, everybody. So you could be seeing a little bit different of the asset revolution the next time you tune in. Yeah. But until then, thank you for joining Matt and I. Matt, thank you again. And in case you haven't done so already today, make sure to tell somebody that you care about them and you love them. And we will see you next time on the Asset Revolution podcast. Cheers, everybody.
We appreciate you listening to this edition of the Asset Revolution podcast. I'm your host, Marc Nichols. Please don't forget to let us know how you like the show by rating and reviewing us on Apple Podcasts or wherever you like to listen. For more downloadable digital asset resources and educational opportunities, please visit us at arbordigital.io. We are here to help you get off zero safely and securely. Thanks again for tuning in, and be sure to tell someone you care about them. Cheers.
Financial advisor, unless you're under contract with or actively speaking with Arbor Capital Management or Arbor Digital, a division of Arbor Capital Management. This podcast is just that, a podcast. It is not financial, legal, or tax advice. If you have individual questions, please reach out.